Yo, what is good, YouTube? We are back with another video. Today is Monday. I took 2 trades today, but we're not here to go over them. We are here to go over internal to external liquidity and how to use it. If you want to see my trades, go into the free Discord, link down below. Other than that, let's get right into the video. So, internal to external liquidity, right? Fair value gaps are the internal liquidity. They are the gaps, displacement legs in the market that the market will then gravitate to and then push to external, or after taking external, which is old highs or lows, it will then gravitate into internal, which is fair value gaps. So right here we have this little depiction of a chart, and right here we set our range, right? We have a high, we have a low, we have displacement back up. Now we have our range set. So what do you want to do? First off, well, you want to measure out equilibrium, right? So up here we have our buy side liquidity external level. Down here we have our sell side liquidity external level. And within here we have lower time frames. So let's say this is the weekly chart. We're looking at a weekly chart. And then down in here we're looking at a 4-hour chart. So right here is external range liquidity on the 4-hour chart, right? Right here, from this high to this low, we have equilibrium, and then when we stop hunt this low, now we have a new range being set. So if you watched my the premium discount video, you know how to use this now. So right here we come down into a weekly imbalance, stop hunting on the 4-hour chart, right? Because if you take a look, and I'll show you in examples, higher time frame imbalances are lower time frame external liquidity levels. So right here, we take out a 4-hour low inside of a weekly imbalance, displacement higher, showing us that we now want to go back to external buy side up here, right? We displace through these highs, rotate into a fair value gap, and then we take out that external level. From here, you want to see, do we displace above it, or do we just sweep it and displace back into the range? So right here, we can say, hey, fair value gap right here. We'll see if we respect it and then displace lower. Right here we displace lower, create a short-term high. We then drop lower, still respecting this imbalance, stop hunt this high, disrespect this fair value gap, swipe this low, come up, come down, swipe this high one more time, and we are still respecting this internal fair value gap. Then we come back up one more time, displace lower, come back into this internal range of liquidity before then swiping the external overall draw on liquidity. So let's go to a weekly chart on gold, right? Let's go to right here. If this loads, here we go. So throughout all this price action, what do we see from here to here? We have a range being set. So from this high to this low, we now have our discount and our premium, right? Because we have now displaced back inside of a range, right? Now we have a low to a high. So right here, when we take this high, we can even start right here. We swipe this high, but we displace through it, showing that this is now the next internal buy side liquidity draw. Okay, well, we swipe that, and where do we go? We come back into, a discount, right? These two fair value gaps are not in a discount. So what do we see? We have our breaker block. We have a weekly breaker right here. This is now our higher time frame point of interest that is in a discount. We displace out of the breaker, and now we have a new range that's set, right? From this low to this high. We are trading within this range right now whenever we slowly make this move down. Why don't we respect this internal range liquidity? Well, it's not in a discount. So what do we look for? What is in a discount? This imbalance all the way over here. Now let's go to the 4-hour chart and see what we see. Go over here. There is a 4-hour low over here, right? Remember when I told you it is this low right here, this swing low in the weekly chart, but it is a sell stop. It's sell stops on the 4-hour chart. All right, so we respect this, displace out of it. Right here becomes the next buy side draw. What do we see after taking that? We rotate back into a fair value gap, come back up, showing that this high now wants to be the draw. Okay, I don't know why my chart does that, so we have to go to the daily, but this high is showing to be the draw. After a while, it might get up there. I don't know if it actually does. Still respecting that fair value gap that is in a discount, right? We come back down again before we finally make our way to this buy side objective. Sorry, I didn't mean to do that. But what do we see throughout here, right? We then set another range, and what do we see here? It's in a discount. Rotate into this fair value gap that's in a discount. We do not take these lows. We take this sell side level right here, displace out to take that buy side level. So right there is internal to external. Let's go to NQ because people like trading indices. So what do we see right here in this price action on Nasdaq? We see that we have a range that is set from this high to this low, or two external levels, right? We have taken sell stops, our external draw right here. Then we rotate back up to buy side external. And where do we rotate back into? We rotate back into internal liquidity. So we come down, then we retake buy side external draw. Oops. Where do we rotate back into? Fair value gap. Where do we go back to? Buy side external. Where do we rotate back to? Sell side external, but there's no displacement, which means this imbalance should hold to send us where? Right here, again, to buy side external. Right here, we continue to hold, boom. We finally inverse this fair value gap, showing that the external draw is now this low. We come back in, tap it, and then we hit that external draw. Okay, so let's head down to the hourly. Right here in this price action, what do we see? Well, we have a swing high, oops, right here. Ignore these fair value gaps. This is the one that is in a premium. So we rotate into a premium internal range liquidity. And where do we rotate to? External range liquidity. Sell side external. What do? This is the overnight session. We fill in this new day gap, displace out of it. Well, we have buy side external up here. We take this high, displacement above it. Where do we go? Fair value gap. Go take that external draw. Okay, well, we have just taken buy side external level. Where do we rotate to? Well, let's take this high to this low. These fair value gaps are not in a discount. This one is. We rotate into internal that is in a discount, displace out of it, then we go take this buy side external draw. Rotate into a fair value gap, we chop around. Where do we go? Well, oops. This fair value gap is not in a discount. This fair value gap is, however. We hold this imbalance and it sends us up to external buy side. So this is buy side, sell side, external to internal. You always want to understand what internal level lies in a discount, and you want to understand how to use that. Even if we take it from this range low, it still sits in a discount. Okay, so what do we see? Internal premium fair value gap from this high to this low, deliver external. We come into new day opening gap, displace out of it. We come down into internal, continue to hold it, rotate to external. Come up, we take out external up here, rotate back into internal. We hold this discounted fair value gap, displace out of it, out to external buy side. We come up, we make a new high, displace down into a discounted internal fair value gap. We come back up to external, and now we are, I traded one trade today on Nasdaq. That was a long that I got out for like $500, but when we're up here, there's no trades to take until we get to discount and see if we want to continue higher. So this is external to internal discount, how to use it. Other than that, I'm out of here. Have a good trading week. Peace.